Hey guys, Boris Osberg from BK Forex. Welcome to our daily technicals for 3/28/13. The question of the day: can Euro set fresh lows after yesterday's downdraft? Past performance not indicative of future results. Trading Forex carries high level risk that is suitable for all investors. High degree of leverage can work against you as well as for you. Before deciding to trade any such leverage products, you should carefully consider your investment objectives, level of experience, and risk appetite. Possibility exists that you can sustain a loss of some of your initial investment, and therefore you should not invest money you cannot afford to lose. You should be aware of all the risks associated with trading on margin and seek advice from an independent financial advisor if you have any doubts. The information, including commentary and trade ideas, that provided on bkforex.com should not be relied upon as a substitute for extensive independent research, which should be performed before making any investment decisions. BK Forex LLC and com are merely providing this information for your general information. The information and opinions presented here do not take into account any particular individual investment objectives, financial situation, or needs. All investors should obtain advice based upon their unique situation before making an investment decision and should tailor their trade size and leverage of their trading to their personal risk appetite. We're not responsible for any loss incurred investments made by readers and clients as a result of any information contained on BK Forex LLC. We do not render investment, legal, tax, accounting, or other professional advice, and if such legal, tax, or other professional advice is required, services of a competent professional should be sought. Well, interesting story in the euro here. We have a little bit of a draft back after yesterday's obviously fresh break of new lows. Euro took down almost to the 27.50 zone, just back there. Consolidated, had a snapback today, and just sort of as you see, the European session is opening up, kind of flaming out on this move. A retake of the 2820 level does create a near-term bottom for the euro. At least it creates a little bit of consolidation. But the real break level here is 2750. If this flame out kind of ends on a downside and we start approaching 2750. A give of 2750 opens up a run towards the 2700, which is a key support level, and then of course the much lower support, not much lower, but the much more stringent support level of 2650 is the key operating level of where the short's trying to push this thing. So it looks right now as just sort of intraday jockeying on a snapback, but it's losing steam, and the faster it loses steam, the more negative it becomes as far as price action, because a break of 2750 really does open up an interesting opportunity here for a push all the way down to the 2700. Euro still very much remains in a negative zone, and only a retake of 2720, like right around here, and then of course a pushback through the 2650s would give us some confidence that a near-term bottom has been set, and perhaps we have a little bit of a retrace to the upside. Yen continues to, I think, befuddle because effectively, when you look at yen, it has just been a 95-94 trade. That's all it's been. And you know, we again tested the lows of yesterday, today, just tested them a little bit, snap back. The key thing I think essentially though is that the snapbacks have been kind of very tepid. See, we have the lows, very, very tepid snapback before 94.50. Another retested the lows. It kind of argues for still perhaps more yen repatriation and more negative dollar yen trades. The breakdown below 9400 here really does open up the possibility for a retest, and this is actually a very negative retest of this 93.50. Remember, this 93.50 was a big value zone. Buyers came in very quickly, bought this up, brought it right back on a snapback. The fact that we haven't had enough juice to kind of forget this zone and move past it suggests that there's still more overlay or overhang on the dollar yen move. So I have to watch this level again very carefully. It broke again. It broke today. Did not snap back. If it breaks again and moves into the 93.80s, the run towards 93.50 becomes very, very real, and then it becomes a real standoff, because if that breaks to the downside, that would augur a much, much more negative construct. Bottom line is, certainly not, doesn't look like to be like a buy, because the snapbacks have been very, very tepid. Perhaps it puts into a more neutral position here once we clear 94.50s, but we still have the 95 to handle. And really only a breakthrough in 95s opens up a much more bullish construct. But again, which looked like it was just consolidating, maybe just kind of turning over, and that's a key, I think, takeaway from today's trade, to watch this to the downside breaks versus trying to figure out where the upside lies right now. Pound looks okay. Pound continues to just basically do its thing around the 51 level, 51.50 level, but and you know, 51 was definitely yesterday. That was the bottom, and pound looks more constructive than the euro does. But again, here, if we flame out and retest the 51s on a break here, then it does open up the possibility of a deeper test of the 50-50 level. So again, sort of a curling over. We have these snapbacks early in the morning today in all these pairs, but none of them look impressive until we kind of clear the key levels here. For the pound, the key level here is really 52. Until we clear 52s again, it looks to be consolidated with a minor bias to the downside, or at least a neutral bias. Pound really is just so neutral at this point. It's almost not even worth looking at. Aussie is shifting lower. This is an interesting thing. Aussie continues to drift lower. Yesterday's low, 104.15. Key tell here. We kind of tested it again. We break through the 104.15s. It looks to be like an unwind all the way to 104s. My friend Jamie Seitel yesterday noted that the Aussie could have possibly made a near-term top. It's definitely starting to look that way more and more. A break here to the lows of 104.15 takes us to 104s, I think. And I think obviously we're going to get some more support here coming into the 104s because that's the gap level from a couple of weeks ago, and also obviously a key support level. But it's how it acts off of this 104 that I think will give us a very, very good clue. If we can't rally back up to 104.50, that would suggest we really did make a new top, and the next level to hit would be 103.50. So watching this break towards the 104s, watching how it acts. If there's a sharp snap back to 104.50, that could have been pretty much consolidative. If we can't get up to 104.50, we start really drifting towards, like, let's say 103.80s, that would really open up the possibility for a move to 103.50. Now 103.50 is a pretty serious support level, and I do think that it's going to find some consolidation and buyers there. But it is clearly, rolling over, and a run towards at least the 104s today, definitely not out of the question. So that's kind of how everything shapes up. Wishing you guys the best of luck and the best of trading. We're obviously entering into a much quieter zone here as the Easter holiday approaches. Easter is already on the books starting tomorrow for Asia, and of course for us 2 days from now. And it looks like it's probably going to be slower, quieter trading. One interesting thing though is if we do have lower liquidity trading, whether that's going to result in quiet trading or perhaps some very sharp moves as people try to test these key support levels amidst low liquidity. So watch for either one of the possibilities, and certainly be very prepared for some gappy markets, because that's going to be a very real possibility as we enter into the end of the week. This is Boris Schlossberg wishing you guys the best of luck, the best of trading. I'll see you guys tomorrow. Bye-bye.